Hi students, so in this video I'm basically going to do the statement of financial position, and this is equal to 35 marks. So again, the number one thing is that you have to know the format. Just a quick basis or some core points that you need to know is that non-current assets is made up of, or rather, sorry, I didn't write assets. Assets is made up of non-current assets and current assets. At this point, you should know that non-current assets are fixed or tangible assets, right? And this here should say actually financial asset, not fixed, because fixed or a tangible asset is the same thing. And then we're going to go to current assets. Current assets is made up of note number 4, 5, and 6, which I'm not going to cover the format of them, but you can go through them in your own time. And then my non-current asset plus my current asset is equal to my total assets. Then we move to the next part of the equity and liability section, which is the shareholders' equity, which is note number 7 and 8, the new notes that you have learned in matric. And then we move on to the liabilities. Liabilities again is made up of non-current liabilities and current liabilities. My non-current liability, everybody, will always ever only be a loan. And my current liability is note number 9, my trade and other payables. Then these are some of the things for us to keep an eye out that we may or may not include in our statement of financial position, but holds a lot of marks. So the current portion of loan, if we are set to repay a portion of the loan within the next 12 months, my shareholders for dividends is basically my final dividends that I'm going to be paying my shareholders at the beginning of next year. And then my SARS income tax, if and only if I have a credit balance and I am owing SARS. So because I read this question before I could make this video, I obviously know that I am owing SARS, all right? That is why I put this here. But when you are going through the question yourself, you must be able to determine whether SARS owes us. So if SARS owes us, we're going to go to trade and other receivables. But in this case, SARS has a credit balance and we are owing SARS. Okay, so once I do my format, then I'm going to go to the question. So I'm going to do this video in two parts, and basically I'm going to start off with the current liabilities or the liability section as a whole, and then we're going to move up simply because not all the information is there if we have to start from the top going down. Okay, so let us start with everybody's favorite topic, the loan. So it says a fixed monthly installment of 50,000 to cover loan repayments and interest has to be paid over the full period of the loan. The repayment and interest for 2024 has been paid and properly recorded. So if I look at my list of balances, I can see the loan that I have from Superbank in 2022 or the beginning of the year. My loan balance was sitting at 3 million rand, and then now my loan balance is sitting at 2,750,000. Okay, so basically they are telling me that I am paying 50,000 every month, and with this 50,000 it is made up of a loan repayment and an interest. Okay, but what is important here is that it has to be paid over the full period of the loan, meaning that every year I am paying 50,000. The repayment and the interest has been properly recorded, okay? And then so that means it's included in these balances. And then it goes on to say the interest will decline over the life of the loan by 10% each year. right? The interest will decline. Decline, everybody, means to go down. So the interest will basically decrease by 10% each year. So the point that is a bit tricky, the point that you needed to know is that every year without fail, I'm going to pay 50,000. But if the interest is declining each year by 10%, it would mean that I'm repaying a higher portion of the loan. All right. So basically, it's following this. I have a balance, and then I repay a portion, I calculate the interest, and then I get a balance at the end. All right. But what is happening each year is that this interest is going down and the repayment is going up. It's going down by 10%. All right. Now, where it says a fixed monthly installment to cover loan repayments and interest has to be paid over the full period of the loan. The full period means that I'm paying 50,000 every year until this loan is paid. This loan is paid off. So the repayment and the interest is coming to 50,000 per month, all right, which comprises of the repayment and the interest. So basically, I would have to work out the interest for next year, remove it from the repayment to get the current portion of the loan. So I know it might be a bit hazy right now, but I'm gonna basically explain to you using the figures. Okay, so let me just get my page. So what do I want to work out? Basically, I am working out the current portion of loan that I need to pay within the next 12 months, because in the statement of financial position, we have under non-current liabilities our loan, and if we have to repay the loan within rather a portion of the loan within the next 12 months, it from a non-current liability, it will move to a current liability. So basically, right, I had a balance at the beginning of the year with 3 million. My balance at the end was 2,750,000. Okay, so what is the difference between this? This difference, if I take my calculator, let's say 3 million minus 2,750,000, and I'm gonna get 250,000. Okay, then the amount that I am paying each year is 50,000 per month, but we all know that there are 12 months in a year, so 5 times 12 is 60. So basically I am paying off 600,000, right? 50,000 each month will add up to 600,000. This 600,000, everyone, is made up of the repayment and the interest, which it's what it's telling me here, to cover loan repayments and interest. So if I know that the repayment for this year was 250,000, that would mean 600 minus 250 is equal to 350,000 rand of interest that I paid this year. All right. Now, what do I need to work out? Again, I'm trying to work out the current portion of loan. So what am I going to do is, I know that by the end of the year, in by the end of next year, sorry guys, I'm just gonna try and get it focused. I don't know why the flash went off, but it's fine. Okay, so back to what I was saying is that 350,000 is the interest this year. I need to work out what will the interest be next year, because I know that whatever the interest is, I still have to pay off the 600,000 to get the current portion of the loan. Okay. By the way, the repayment and the current portion of the loan is the same thing. That is what I'm referring to. So I want the current portion of the loan that I will pay over the next 12 months. So here they're telling me that the interest will decline over the life of the loan by 10% each year. That means if this year I paid 350,000 times 10%, I'm going to get 35,000. 350,000 times, oh sorry, minus 35,000 is going to give me, my ink is almost finishing, 315,000. All right, so this is the interest next year, okay, which is the 2025 financial year. Now, what do I know? That I have to pay 50,000 monthly over the full period of the loan. So again, 50 times 12 is 600,000. So next year, the total amount that I'm still paying is 600,000, except that the interest will be 315,000. So therefore, sorry, you didn't see that. So next year, 600,000 I'd still have to pay off. That is 50 times 12. The interest now would be 315,000. How did I get that? The interest of this year times, you could just say 350,000 times 90%, which will give me 315,000, or if you take it times 10% and minus it, you would get the same answer. So the repayment or the current portion of the loan, let me write it. I would say 600,000 minus 315,000 to be 285. So this is the amount that I will repay over to Superbank, right, for the next financial year. Now, at the beginning, I told you that what I was going to do is that I know that a non-current liability will always only ever be my loan. So the balance of the loan is 2,750,000, right? So 2,750,000, that is what the loan at the end is sitting at. And I'm minusing 285,000, the capital portion or the repayment or the current portion of the loan. I'm minusing it here because it is no longer a non-current liability. I have an obligation to pay this within the next 12 months. So I'm going to say here under from non-current liability, it will go under current liabilities. And then under current liabilities, one of the line items is current portion of loan. I'm going to say 285,000. Okay. Just a quick side note is that we usually award you an operation mark here when you minus your current portion of loan. Even if your answer is wrong but you knew to transfer it, we will award you this mark. Okay, so that is the loan portion that is done. Next, we will look at rent income. So it says rent of 94,000 was received from a tenant for the period 1st of March 2023 to the 30th of April 2024, this has been recorded. So, firstly, we are talking about rent income. They are telling me that this income was received from a tenant, right, for the period of 1st of March to the 30th of April. Now, we know that our financial year is ending on the 28th of Feb 2024. So, this is basically 2 months after my financial year can end. So, if I have to work this out, right, if it's still bothering you, just draw your timeline. 1st of March 2023, my financial year ends on the 28th of Feb 2024, and I received money on the 30th of April 2024. So if this is my financial year end, what I do is I make a barrier and I say, okay, how many months? March and April. These are the 2 months where I received money in advance. It says the monthly rent was decreased by 800 on the 1st of December 2023. So again, I'm going to go plot that. 1st of December is lying somewhere here, 2023, obviously before Feb. And what happened is that my rent went down. Okay. The total amount of this rent is 94,000. So what I'm going to do is I'm going to say let rent equal X, because I don't know the value of the rent for 1 month. Okay. Let rent equal X means, please do not panic. It just means this is the value of the rent for 1 month, which I don't know. If I knew, my life would be a lot easier at this point. But I'm going to work it out. So basically, I'm going to use my timeline and I'm going to use the barriers and form an equation. So the first barrier starts here, okay? The beginning of the financial year all the way to the 1st of December. So what happened here is that the rent decreased. So for March, April, May, June, July, August, September, October, November, not December, my rent was 1, 2, 3, 4, 5, 6, 7, 8, 9. 9x. All right, 9x. Why am I saying 9x? Because it's 9 times the rent of 1 month, which I don't know. The reason why I'm not including December is because the rent decreased on the 1st of December by 800, which means that at the end of December, when I paid my rent, I paid 800 Rand less. And then this is the end of my financial year, but because I received rent for March and April, I'm going to include that. Okay, so I'm going to say plus December, January, February, March, and April. December, Jan, Feb, March, and April. This is 5 months. So I'm going to say now 5. For 5 months, the rent was X, which I don't know the rent amount, minus 800 because the rent decreased, and it's all equal to 94,000. So all I'm basically going to do is solve this equation. So 9x, and then I multiply inside the bracket. 5 times x is 5x. 5 times 800 is 5 times 8 is 40, so 4,000, 94,000. Right, we're going to add the like terms. 9 plus 5 is 14x. When I take this to the other side, I'm going to say 94,000 plus 4,000, which will give me 98,000. So x is equal to 98,000 divided by 14. This is equal to 7,000. All right, so Again, what is the 7,000 equal to? 1 month's rent without decrease. So what do I want? The rent for March and April. Now, March and April, I know is falling here within this 5 months. What is the equation for that? X minus 800. So X minus 800, now that I have the value of X, 7,000 minus 800, right, is 6,200. Okay, now because it's March and April, I'm going to say times 2. 6,200 is equal to 12,400, and basically I'm saying that I received 12,400 in advance, which is income received in advance, or I can say that it is deferred income. Okay, so that was quite a lot, but you will get the hang of it. So I know that deferred income goes to my trade and other payables. But while we are here, let me just show you that T plus P, everyone, means trade and other payables. An acronym that is quite handy to remember is that trade and other payables is made up of trade creditors, accrued expense, and deferred income. All right. So if I was to fill this out, I would know that my trade creditors is the same thing as creditors control. So I go to my list of balances and then I look for creditors control. It's 420,000. I'm going to say 420,000. My accrued expense, do I have any accrued expenses here? Yes, I do. It's 9,600. I would say 9,600. Then I just calculated my deferred income of 12,400. So learning an acronym like this is beneficial because it's telling you look for these things, and if you have them, include them in the note. Obviously, this is not the only things that we include, but if you do it this way, then you know that you are sure to get marks. So because we are not required to do the note, we're only required to do the statement of financial position. By now in your mind, you should have written this somewhere, or by now, not in your mind, but on your paper, you should have written this somewhere, or you would have already known the format and you could have just added the figures. So I'm going to go to my trade and other payables, and then I left some space here. So I would say 420,000. Again, this is my creditors control. My 9,600 is the accrued expense that I got from the list of balances. And then now I just worked out my deferred income, or my income received in advance. Okay, moving on to the next one, which is the director's fee. It says directors' fees paid for the year amounted to 1,665,000. The company has, so this is the total amount. The company has 3 directors who received the same fee. The first director received her full fee for the current year. So the current year, or every year, we know is made up of 12 months. So the first director received the current salary for 12 months. It says the second director did not receive his fees for Feb 2024. We know that Feb 2024 is the last month of the financial year. So this director received his salary for 11 months. And then the third director requested the company to pay his fees for March and April. If we know that the last day of our financial year is on the 28th of Feb 2024, March and April is 2 months after that, 2 months in the new financial year. So this director received director's fees for 14 months. Okay, now because they all are earning the same salary, it works to our advantage. So very simply put, I'm just gonna say my three directors. The first director, I'm gonna say let director's fee equal X, because I do not know the director's fee for 1 month. Okay, so the first director 12x, the second director 11x, and the third director 14x, and then this is all equal to 1,665,000. All right, now if I add all of this, I add the like terms. 12 plus 11 plus 14 is equal to 37x. 1,665,000. X is equal to 1,606. 1,600 and oh man, is it 55 or 65? What did I write here? 65. 1,665,000 divided by 37. So X is now equal to 45,000. Okay. Bear in mind, right, that the director's fees is equal to 45,000 as a whole. Okay. The director's fee, the first director received her full fee for the current year. So this director is completely fine. The second director did not receive his fees for Feb 2024. So we are owing this director 45,000. So if we are owing them, it becomes an accrued expense. Where do I know accrued expenses go? Under my trade and other payables. So I'm going to say under my trade and other payables here, plus 45,000. Then the third director requested the company to pay his fees for March and April. So it is given that for the full 12 months they received, but even more than that, March and April would be a prepaid expense for 2 months. So because I know the value that the value of 1 month salary is 45,000, I would say 45,000 times 2 is equal to 90,000. And this 90,000, a prepaid expense, falls under trade and other receivables. Okay. So what am I going to do is on a new page now, I'm going to show you T plus R, which stands for trade and other receivables, TAP. Okay, this is another acronym. So we're going to say trade debtors, accrued income, and prepaid expense. If you learn this acronym, you are likely to get marks. So trade debtors and debtors control, everyone, is the same thing. So I am going to go to my debtors control if I have it. I have net trade debtors. So basically, net trade debtors is equal to my debtors control minus my provision for bad debts. Will give me my net trade debtors. All right. So 950,000 accrued income. Maybe it's somewhere here, but for now I don't have it. But I do know that this 90,000 is a prepaid expense. So 90,000. So I have these two things. I know it's going to go into trade and other receivables. So I'm going to go to my statement of financial position, and basically I'm just going to go and add it there. So what did I have? I had 950,000, and then I also know that 90,000 as a prepaid expense is going there. Okay. Then the next one, the provision for bad debts must decrease by 7,000. Okay, so this is a bit of a theoretical question. It requires a lot of, not a lot, but a little bit knowledge and understanding of the trade and other receivables note. So basically, I'm just going to give you an example, right? The way that it works is that in the trade and other receivables note, which I just explained to you, we have something called net trade debtors. So this is equal to my debtors control, whatever it may be, minus my provision of bad debts. So for example, if I told you, now listen guys, this is just an example. I'm pulling these figures from my head. It's not from the question, so please do not get confused. It's just an example. If I told you that the debtors control is sitting at 100,000, and then I minus 10,000, all right? If I minus 10,000, then I know that my net trade debtors is sitting at 90,000. 100,000 minus 10,000, because a provision for bad debt means that we are making for a provision for those people who are not going to pay us. Who is taking the loss? That company, because we know that from all the debtors that we have, there is a certain percentage of um, debt that we will not be receiving from our debtors. So we take that loss. We are prudent in our thinking, and we say, okay, from all the debtors, we anticipate that 90,000 will come in. It's the debtors control, which is all of the people that is owing me money, minus the provision of bad debts. Now, secondly, if I were to say that the provision must decrease by let's say I'm telling you that the provision must decrease by 5,000, all right, and my debtors control remain the same. So my debtors control, my net trade debtors, my debtors control is still 100,000, and then my provision of bad debts, I'm going to say that it's still 10,000, but here I'm saying it must decrease by 5,000. If I'm saying it must decrease by 5,000, I'm saying 10,000 minus 5,000 here is 5,000. But what does it do to this figure here, the net trade debtors? Now I'm saying 100,000 minus 5,000. It's increasing my net trade debtors. I now expect 95,000 to come in. So from 90,000 to 95,000, right? How did that happen? My provision of bad debts, it decreased. My provision, the smaller the provision, the bigger the amount of money that will be able to come in. All right. So in this adjustment here, where it is saying the provision for bad debts must decrease by 7,000, what effect will it have on my net trade debtors? It's going to increase by 7,000 overall. Okay, so I have my net trade debtors. Where did I write it? I have my net trade debtors here, and I can say plus 7,000. I hope from this example that you understood, right? That it's gonna go from 90,000 to 95,000, just as an example, if the provision decreases, because the provision will decrease if you take